All right, everyone, welcome back to Talk Tickers. Today, we're doing a deep dive into Baozun's Q3 2024 earnings call. We got the transcript right here and some stock info pulled up, ready to break down what's really happening with this Chinese e-commerce powerhouse.
Yeah, it's a fascinating time for Baozun. You know, they've been through some strategic shifts, and now they're reporting a 13% year-over-year revenue increase, totaling 2.1 billion RMB. That's not just a small jump. It really shows they're making progress.
Yeah, for sure.
What's interesting is this growth is coming from both their e-commerce, the BEC segment, and brand management, their BBM segment. They're not putting all their eggs in one basket, which is a sign of smart diversification.
That's a great point. We've seen some companies really struggle when they become too reliant on just a single revenue source. Speaking of diversification, let's talk about their Douyin strategy. Remember that partnership with location Baozun they announced a while back? Well, it's paying off big time. Their Douyin business is booming. We're talking triple-digit year-over-year growth.
Now, for those who might not be as familiar with Douyin, think of it like the TikTok of China. It's where a massive amount of user engagement is, and Baozun is clearly capitalizing on that.
Absolutely.
What's particularly impressive is how they're leveraging Douyin, not just for direct sales, but also for brand building and customer engagement. They're creating interactive live streams, partnering with influencers, really tapping into the unique dynamics of that platform. Really savvy move for reaching a younger, more digitally native audience.
It shows they're adaptable, willing to go where the customers are instead of just clinging to old methods. Now, remember a while back, Baozun acquired Gap's China business. It was a bit of a rough start, to say the least. But after some restructuring, they're seeing a 10% year-over-year revenue increase for the Gap brand.
This raises an important question, though. Can they sustain this Gap momentum? The Chinese consumer market is known for being so dynamic and ever-changing. So while it's positive to see this turnaround, we need to watch closely and see if it holds.
Yeah, it's a good reminder that not every win is a guaranteed slam dunk. But it definitely shows they're working to turn things around. Now let's move on to Singles Day. China's biggest shopping extravaganza. Baozun absolutely crushed it, hitting record order revenue with double-digit growth. But there is a bit of a catch. They also mentioned higher return rates.
Yeah, that's the double-edged sword of a massive sales event like Singles Day. While the initial sales figures are undeniably impressive, those high return rates can eat into profits and create logistical headaches down the line.
Makes sense.
It's something they'll need to address if they want to ensure long-term profitability from these types of events.
Absolutely. High sales are great. But ultimately, it's the profit that matters. It'll be interesting to see how they try to mitigate those returns, maybe through better product descriptions, more targeted marketing, or even leveraging AI for smarter inventory management. Speaking of AI, Baozun is making some major investments in this area. They're implementing AI tools for things like customer service and data analytics, really looking to boost efficiency and gain an edge.
What's fascinating about their AI approach is that they're positioning themselves not just as an e-commerce platform, but as a tech-driven solutions provider. Think of it like this. They're using AI to analyze massive amounts of data to predict future trends, personalize marketing campaigns for each customer, and even optimize their logistics network in real time. This could be a major differentiator for them in the long run.
It's almost like they're building a custom shopping experience for every single customer. Now, that's a powerful use of technology.
Okay, I think that covers the first part of our deep dive. We've seen some promising signs from Baozun, but also some potential challenges.
Definitely, they've shown resilience and adaptability, but it's still a dynamic market with plenty of competition. Let's move on to their financials next and see how those numbers are shaping up. Welcome back to Talk Tickers, everyone. Let's dig into the nitty-gritty of Baozun's financials and see what these numbers tell us. All right, time to put on our financial analyst hats and dissect those earnings. First up, gross profit for the quarter increased by 2% to 220 million RMB. That's a positive sign. But let's zoom in a little closer. Their e-commerce gross margin actually took a slight dip, coming in at 10.2% for the quarter.
Yeah, they attributed this decrease to a higher proportion of promotional rebates. Essentially, they're offering more discounts and incentives to attract and retain customers, especially during events like Singles Day. However, when we look at their e-commerce gross margin on a like-for-like basis, meaning we're comparing apples to apples, and factoring out those promotional costs, the margin actually expanded by about 500 basis points year over year.
Okay, so the underlying profitability of their e-commerce business is actually improving, even if the headline number looks a bit flat due to those promotional activities. Makes sense. Now, what about their brand management segment? How are the margins looking there?
Their brand management gross margin remained relatively stable at 52.9%. This is a good sign, especially considering the turnaround they've achieved with the Gap brand. It shows they're maintaining profitability in this segment, which is crucial as they continue to invest in growth and expansion.
Yeah, it's always reassuring to see a company focused on profitable growth, not just growth at any cost. Now let's shift our focus to their operating performance. Did they manage to shrink that adjusted operating loss?
They did. They reported an adjusted operating loss of 85 million RMB for the quarter. Now, I know that sounds like a lot, but remember, this is an adjusted number. And it's actually an improvement of 5 million RMB compared to the same period last year. They're steadily moving towards profitability, even if they haven't quite crossed that threshold yet.
So they're making progress, they're losing less money than before. It's encouraging to see that their cost management strategies are starting to take effect. But what about the breakdown between their e-commerce and brand management segments? Are both contributing to this improvement?
Yes, both segments are playing a role. Their e-commerce segment saw an adjusted operating loss of 30 million RMB, which is an improvement of 10 million RMB year over year. And their brand management segment reported an adjusted operating loss of 55 million RMB. So it's a combined effort with both segments showing positive trends.
All right, so the overall picture is looking a bit brighter when it comes to their operating performance. But let's get to the bottom line. What's the net loss situation?
Their adjusted net loss attributable to shareholders for the quarter was 67 million RMB. This represents an improvement of 12.5% year over year. Again, it's not profitability just yet, but it's a clear sign of progress and indicates that their efforts to control costs and improve efficiency are paying off.
It's important to remember that the Chinese economy has been facing some headwinds lately, and the retail sector in particular has been impacted. So for Baozun to be showing this level of improvement in such a challenging environment is actually quite impressive.
Absolutely. They're demonstrating resilience and an ability to navigate difficult market conditions. And on top of that, they've also been actively repurchasing their own shares, which suggests they believe their stock is undervalued.
Oh yes, a classic stock buyback. It's a pretty clear signal that they have confidence in the company's future prospects. So they're making strides towards profitability, buying back their own stock, and positioning themselves as a tech-driven solutions provider. It's starting to paint a compelling picture, even with those lingering concerns about return rates.
Indeed. Baozun is facing challenges, no doubt, but they're also seizing opportunities and adapting to the evolving landscape of Chinese e-commerce.
Now, before we move on, I'm curious, what's the one financial metric that really stood out to you from this earnings call? What jumped out and grabbed your attention?
That's a great question. While the top-line growth is certainly positive, what truly impressed me was their emphasis on improving operational efficiency through AI. It's not just a buzzword for them, it's a core strategy that's directly impacting their bottom line. For example, their intelligent customer service initiative is already delivering tangible results, like reduced response times and improved service quality.
That's a great example of how they're not just throwing money at problems. They're using technology to find innovative solutions. It's encouraging to see that level of strategic thinking.
Absolutely. It shows a commitment to long-term sustainable growth, which is something I always look for as an investor.
Okay, I think we've covered the financial highlights quite thoroughly. We've seen some promising signs, but also some areas that require careful monitoring.
Exactly. It's a mixed bag, but that's to be expected in a dynamic market like this.
Now the question on everyone's mind. Is BZUN a buy? Let's dive into their strategic outlook next and try to answer that burning question. Stay with us.
Welcome back to Talk Tickers, everyone. It's time for the final part of our Baozun deep dive, where we'll examine their strategic outlook and try to answer that all-important question. Is BZUN a buy?
Let's start by unpacking what Baozun's management had to say about their plans for the future. They emphasized their commitment to omnichannel expansion, particularly on platforms like Douyin and Tencent's mini programs. Remember that triple-digit growth they saw in Douyin? They're definitely onto something there.
They're clearly tapping into where the consumers are, not just chasing trends, but anticipating them. That's a valuable skill in any market, but especially in the rapidly evolving world of Chinese e-commerce.
They also highlighted their ongoing investment in AI, emphasizing its role in boosting efficiency and elevating the customer experience. It's not simply about automating tasks, but using AI to glean insights, personalize interactions, and ultimately create a seamless shopping journey for every customer. So they're not just trying to sell more, they're building a sophisticated ecosystem where technology enhances the entire shopping experience. It's a smart long-term strategy. What about their brand management segment? Any key takeaways there?
They're aiming for sustained top-line growth in 2025, primarily driven by their partnership with Gap Inc. and their efforts to tailor products to the Chinese market. They're not just slapping a Gap logo on something and hoping for the best. They're carefully considering the specific tastes and preferences of the Chinese consumer.
It's a localization strategy, recognizing that what works in one market might need tweaking for another. It shows they're not taking a one-size-fits-all approach.
They even mentioned plans to expand their offline presence, aiming to open 50 new Gap stores by the end of 2024. It's an interesting move considering the dominance of e-commerce, but it shows they're thinking omnichannel, offering customers a choice of how and where they shop.
It's almost like they're creating this immersive Baozun world where customers can engage with brands online, in-store, through social media. It's a truly multifaceted approach, so they have a solid plan, they're making strategic moves, and they're embracing the future. But let's get down to brass tacks. Is BZUN a buy?
That, my friend, is a question only you can answer after doing your own due diligence. We've provided you with the information, the analysis, the context, but ultimately the investment decision is yours.
We're analysts, not fortune tellers.
Right.
But what we can say is that Baozun is a company in transition, evolving, innovating, showing signs of a real turnaround.
Their omnichannel expansion, their AI initiatives, their commitment to profitable growth, these are all positive indicators.
But there are also risks to consider. The Chinese economy is facing some uncertainty. Competition in e-commerce is fierce, and those high return rates are a valid concern.
It's a classic risk-reward scenario. The potential upside is significant if they execute their strategy well, but there are also potential downsides to factor in.
So for our listeners considering adding BZUN to their portfolios, do your research, weigh the pros and cons, and make a decision that aligns with your personal investment goals and risk tolerance.
Exactly. And remember, past performance is not an indicator of future results. Investing always involves risk.
Now, before we wrap up, it's time for our favorite segment, the one where we throw caution to the wind and indulge in some purely speculative, this is not financial advice, brainstorming.
Hit me with your wildest BZUN trade idea.
All right. Imagine a world where Baozun becomes the gateway for Western brands breaking into the Chinese market. They become the indispensable partner, the bridge between two worlds. They leverage their AI, their omnichannel expertise, their deep understanding of the Chinese consumer to become the go-to solution for any Western brand looking to succeed in China.
Okay, I see where you're going with this. It's a bold idea, but not entirely implausible. They've already proven they can handle complex operations, navigate the intricacies of the Chinese market, and adapt to new technologies. If they can position themselves as that essential partner for Western brands, the potential upside is huge.
Think about it. They could become the Alibaba of Western brands entering China. It's a long shot for sure. But stranger things have happened in the business world. And to be crystal clear, this is purely hypothetical, not financial advice.
It's definitely not financial advice. Do your own research, folks.
Always do your own research. That wraps up our deep dive into Baozun's Q3 earnings call. We've covered their financial performance, their strategic outlook, and even indulged in a little speculative fun. Hopefully you've gained some valuable insights that will help you make informed investment decisions. Until next time, happy investing.